Okay, we'll go ahead and get started, you guys. Today we have a speaker who is a tax practitioner to talk to us about the business of a tax practice and also what she does day to day. Maybe bring in a couple of things that we're going to talk about in this chapter, but really just whatever you want to talk about. Jenny Frantz, and she is a graduate of GSW in the accounting program here, and she has a tax practice in Americas. Thank you.
Good morning. So, yes, my name is Jenny Frantz, and I'll tell y'all a little bit about myself. I'm originally from Ellenville, Georgia. Have any of y'all heard of Candy Cane? Probably not, maybe. Okay. Grew up in Ellenville, Georgia. My husband and I one, and so originally from this area, and I did get my degree from GSW in accounting back in, I'm trying not to tell my age here, but back in 2004, but I was married at the time, had a kid at the time. I'll get into a little bit of that in a minute. But I've got a 16-year-old daughter who's giving me lots of extra gray hairs up here because she just started to learn how to drive. To Southland this year, but family life and work life can be balanced in this profession and in this field. And you're going to find out real quick, like, y'all are here for tax, so in my mind, I'm going to tell myself, y'all already know if you like numbers. You already know if this is really where you want to be. And if you don't know that yet, once you get out there in the field, you're going to learn real quick, whether it's for you or it's not for you. But I've always loved numbers. I actually have a strong banking background. That's where I started. And I worked at several banks here in town. Then I went to Lockheed Martin and I worked in their cost accounting department. Absolutely loved it. That's where I fell in with the love of numbers. And that's the good thing about accounting is you can go from your manufacturing and what I'm going to call your private accounting, and there's different areas that your cost. You've got your finance, and a lot of firms like that, or manufacturing companies like that, have big accounting offices. You don't see it a lot here in America, small town, but when you branch out, you have your bigger, larger companies. So the opportunity is there, not just directly with a firm or with an accounting firm. You've got totally, it's open. Your field is open. You've got tax, you've got audit, you've got payroll audits where they have auditors that come in and audit payroll. Audit, Department of Labor has an audit department. Georgia Department of Revenue, IRS, everybody has different audit departments. And then you've got your firms. I've actually been working at Strickland Accounting for over 20 years. I started there back in 2003 when I left Lockheed Martin. I started out just as a bookkeeper. I had strong general ledger background from working in cost accounting, and I knew a lot of journal entries and that side of thing. Knew how to reconcile a bank account, of course, from working at the bank. But tax was an option, but it wasn't something that I was really pursuing at the time. And I worked for, my boss is Charles Strickland. I won't tell y'all his age, but he's up there and he should be at home and retired. But I actually came on board and became a partner 3 years ago, and I'm actually purchasing the practice from him. So he's hoping to retire in the next year or two, which I will be thankful for. But we're a small firm. We have, besides myself and Mr. Charles, we just have 2 other employees. We process probably over 700 to 1,000 tax returns during a tax season. And a lot of people think, oh, that's, February, March, and April. Well, probably a good 60% got your strugglers that are on extension, and they like to wait till the last minute. So that's going to be your September and your October. And you have a lot of different things going around. In our firm, we handle everything from payroll to tax to 2290 forms. We handle anything. I've actually got a client now I'm helping. We help them get their alcohol license. We help them get their tobacco license for new business setup. We handle payroll. We've got several clients we actually print their payroll checks for, and they pick them up from us just like if you were working at another job. We process their payroll for them. We process quarterly payroll reports and tax payments. So we do a wide variety of counting, I'm going to say probably from start to finish. We have clients that bring us in, these are the ones you love, They bring you in a box, and their bank statements are in there somewhere, their check stubs are in there somewhere, and thousands of receipts. So you get to go through all of that, you get to enter all that in, try to make sense of what they did, and we process the tax return from there. We have some clients we issue financials for every month or every quarter. They want to see how they're going throughout the year. They want to know kind of what they're looking at. And we do a lot of tax planning in November. That's to help our clients, hey, you're sitting here with a large profit, purchase to get your profit down so you don't owe as much tax. Or if there's a way, go ahead and, like I said, purchase something, or they might just say, hey, I want the profit for the year, and we just see how it goes. So that tells you a little bit about myself. I've actually been processing tax returns for about 8 years now, and I am, to tell you a little about my license, I am not a CPA. I'm an enrolled agent with the IRS. Do y'all know the difference? No? Yes? Okay. So the basic way for me to tell y'all the difference between an enrolled agent and a CPA is I cannot do state audits. And what I mean by state audits is if you have someone that has a home daycare and they get money from the state, and they have to use that money on certain things. Most of the time, they have to have their books audited for the state funds. I cannot handle those audits. Sometimes the cities, like if City of Americus has to have their books audited because they're a government entity, I cannot handle that audit for them. I can handle an audit if my client has an audit for IRS or with Georgia, and I'll tell you all about a couple of those we've got going on. I can handle that audit. I can go to appeals in Atlanta for that client. I can handle everything from that aspect. So the only thing I can't do is the state audits. And I'll be honest, I don't really. That's something else in another field. I'm happy with the license I have. At one time, and don't quote me on this, but I'll say it, Mr. Strickland, my boss, is also, I keep calling him my boss because that's what he's been for 70 years. My partner, I guess is what I should say. He's also an enrolled agent. And as far as I know, we're the only 2 enrolled agents in Sumter County. A lot of the other firms are CPAs or have people that just work under them that don't have an actual license. So that kind of tells you a little bit about myself and the business. Let's see. Let me go back to kind of work life and family life. So of course, our busiest time of the year is, I'm going to say January to May, and then I'm going to say probably September to November. And the reason I say that is because my firm handles a lot of payroll. We have W-2s that have to be issued out by January 31st. We have 1099s that have to be issued out by January 31st. We have, so that handles, and quarterly reports. Quarterly reports are due in January. So all those payroll clients that we have a lot of work that we have to get out by January 31st. IRS loves to change tax deadlines on you. At one time, we didn't have to issue those 1099s until February, and that was wonderful. Now we have to issue them by the end of January. We file pretty much everything in our office electronically. IRS requires us to file tax returns electronically. So the only reason we would not file a tax return electronically is if there was a problem with getting it submitted, or a lot of times you'll see in split homes, this parent's done claimed Johnny over here on their tax return and mom didn't get a chance to, and she swears up and down that she can, and she has divorce papers to prove it and everything. We have to paper file her return and send in all the documentation to back it up. So in that case, we would paper file her return. And unfortunately for her right now, after COVID and IRS being so backed up and everything, her return might not get processed for 6 to 9 months. So if she has a nice refund coming, she's going to be waiting a while. But, so that's kind of what we do in January. February 1st, we are usually rocking and rolling on tax returns. Business tax returns for your S Corps and for your partnerships. You all know S Corps and partnerships? Yes, okay. S Corps and partnerships are due March 15th. And then your C Corps and individual returns are due April 15th. A lot of times we will get extensions on our business clients if they don't have kind of everything in place by January. And then that allows us more time to finish up their business return in September, and then their personal return is due in October, and we kind of do both of them together. We don't wait until September or October to complete the returns. If we have their information in May or June, we go ahead and process it. So that's one less client that we have to worry about processing in September or October. So that's kind of the busier times. My firm, we usually work 8:30 to 5:30 during January to May. And the reason I'm saying May, even though the deadline is April 15th, is we have quarterly payroll reports that are due April 30th. And we usually work 8:30 to 5:30. We rotate Saturdays, and when the girls work on Saturdays, they usually work like 9 to 1. I'm usually the workaholic. I'm gonna be there all day Saturday. I might work some Sunday afternoon. I'm a partner in the firm. Fixing to be probably the only partner in the firm, so I've kind of dug my feet in when I bought the practice, and that's just where my heart's at. I don't usually work late during the week because I have a daughter, because I have a family life. She's 16 and kind of mobile. You know, I might see her in passing, hey mom, I need some more money, or I'm here to eat supper. Y'all know how that goes. But usually 5:30, 6 o'clock, I do try to get out of there during the week because you've got to have a balance. You've got to be able to step away and take a break and that kind of thing. So it is possible, it is doable. You might work a lot during certain months, but we also have our downtime. On April 15th, we are not processing a tax return. If you come in my firm, and usually by April 10th, I'm going to really say by April 1st, I'm not going to guarantee you it's going to get out the door. We will automatically get you an extension. We like to be sitting around kind of staring at each other on April 15th and just going, you know, we survived, we made it, kind of deal, you know. But that kind of lets you know kind of where I'm at. I will say I got my bachelor's in from GSW. I never went and got my master's. And that is one thing that I won't say I regretted at the time I was filing my decision. That is something I kind of have on my bucket list. I still want to come back and get my master's. And is it required? No, it's not required for what I do. I can process tax returns. I can, you know, under my license, I'm fine without it. But it's just a personal thing. I would say if you're strong and you're passionate about accounting, go ahead and do it while you're doing it. Don't worry about trying to get it later. Just keep going and get it while you can. I've talked to y'all about manufacturing firms. All right, Miss Carol told me a little bit about what she's going to discuss here in the chapter. So I'm going to touch a little bit about some of this. QBI deduction. Have y'all ever heard of that? Probably not. And I'm not sure how updated books are. I noticed QBI deduction, you'll hear a lot of abbreviations, and I'm going to be honest with you. A lot of terminology that you get in your books. You don't see it every day. You don't necessarily see it every year. A lot, when I was studying to get my license and everything, I knew individual tax, and I had already been preparing tax returns when I took my license to get my enrolled agents. So that helped out a lot because I had already been practicing tax returns. But there's a lot in there, and even for the CPA exam, you can learn so much in a classroom. There's so much more that you might not see day to day. There is a lot of trust. There's a lot of estates. Unless you've got a lot of older clientele, and we do at our firm. So trust and estates are not something that's uncommon for us. They're not going to be uncommon at your larger firms either. But it's something that you don't have to deal with that with your client until they lose a family member. Or they lose, you know, a mother or father. And they come to you and they're like, oh my gosh, what do we have to do? Trust. Haven't seen a whole lot of that in our firm. We've had a couple of clients that want to set up trust for kids. So a lot of times you don't have to do anything with those tax returns until they're actually funded and some of the money is used and that kind of thing. So you don't see a lot of this as a day-to-day. Now your 1040s, your S-Corps, your C-Corps, you're going to see that stuff day in, day out. You're going to have Johnny come in there and say, I heard I can get a tax break if I kind of do something on the side. And that's the way they're going to word it to you. And that's when you, okay, Johnny, you know, what are you doing on the side? You know, are you cutting grass? What are you doing? Well, I'm still trying to figure it out. Okay, well, Johnny, when you figure that out, you can come back and see us. They hear so much out on the street. My brother over here got an extra $3,000 for his kids on child tax credit. Why didn't I get that much? You're going to see it so many times. And I hate to say it, but a lot of people compare it. The hardest thing during COVID for us, and I know I got back on 1040s, give me just a second, we'll go back to QBI. But a lot of times, the biggest confusion we saw during COVID was when COVID came about, they issued a lot of extra money for your child tax credit. They issued extra money for your daycare credits and stuff like that as well. So then 2 years later, or for 2022, we went back to the original deductions. So where all these people were getting a nice, happy, fat $5,000 refund for 2020 and 2021, and then they went back to $2,000, well, what'd you do wrong? Okay, and you have to explain it to them. And I hate to say it, y'all know how it is when it comes down to money at the end of the day. They're like, what'd you do to my money? That's just, it's practical, y'all. You've got clients that are little old ladies that just trust you from, you could take them out somewhere and they'd be scared to death. If they're with you, they don't care. They're gonna come in, they're gonna dump all their stuff to you. They trust you. That's what a tax professional needs to be. They've got to be able to trust you. That's just like going to the doctor. When you go to the doctor, you either like that doctor or you don't. If you don't, more than likely, you're gonna find another doctor to go to. That's just part of it. A lot of people feel that way about tax professionals. They've got to have that good vibe. They've got to be able to trust you. They've got to know you're going to look after them. But in turn, you've got to be able to trust that client. You've got to be able to trust Johnny's telling you the truth. But guess what? He's signing that tax return, but your name's on that tax return as well. So if Johnny gets a notice from the IRS, oh, this is wrong, they're going to audit me. Guess who Johnny's going to? Johnny's going to come back to you and look to you to, well, why'd you do this? Well, Johnny, that's what you told me, and that's the documentation you gave me. Well, that might not have been true. Well, I didn't know that. You gave me documentation. So you've got to be able to trust your clients. If you don't, y'all know it. It's a gut feeling. If you don't, it's okay. Send them out the door. It's not worth your time, and it's not worth your license or your credentials or anything that you have. And we have penalties as well. If I don't follow a certain protocol, if I don't have my documentation to know that Johnny's kid, Savannah, belongs to him, I could be penalized. Back to QBI deductions. I know I get off, y'all. All right, QBI deduction is what they call a qualified business deduction. It actually started in 2017, and the best way I know how to explain it to you and how I explain it to my clients is if you have a business and you have a profit for once, IRS is going to give you a deduction for it, and it is wonderful. They're not penalizing you for having a profit for a change. So the QBI deduction, if I'm not mistaken, is 20%. And the way that flows over on your 1040, it actually comes, thinking about a 1040, you got your W-2 income, you've got your business income and that kind of thing. I'm going to say on page 2, and there's the way it changes up in our system, and I'll tell you all a little bit about our computer programs in a minute. But after your itemized deductions, then your QBI deductions come off. And it's 20% of that business profit. It can be profit from your Schedule C, it can be a profit from a pass-through of an S-Corp or a partnership, and it is a wonderful thing. And when you tell a client, hey, you got a deduction because you had a profit in your business, their mouth goes, yes, for once, IRS actually gives you a deduction. So that is a nice deduction that they actually decided to give. One of the other things that we see a lot in our firm is when Johnny comes back and Johnny tells me, hey, Miss Jenny, I actually did open up a lawn care business, as a sole proprietor. I'm like, great, Johnny, do you have a separate checking account? Well, no, I kind of got it all mingled in with my personal. The first thing I tell them, hey, you need to separate that business from personal. If you want to operate as a sole proprietor, that's fine, but you need to keep it separate. It makes it a lot cleaner. If IRS comes in, the first thing they're going to ask you for is bank statements. It doesn't matter if it's business, it doesn't matter if it's personal. They can come in, and if you don't give it, they have authority to get it for you. We see a lot. Y'all familiar with the Schedule C? We see a lot of these just because Johnny opened up a lawn care. We see a lot of it, and I'll be honest, general rule of thumb, when a client comes in and says, hey, I opened up my lawn care business, what kind of tax entity do I need to do? We tell them, start off as either a sole proprietor Schedule C or start off as a single member LLC. a disregarded entity. The reason we do that is we want to make sure, our general rule of thumb I tell my clients is if you can survive your business 2 years and you can keep it up in 2 years and you're seeing a profit, you're doing great. If a business is going to succeed, usually it will make it 2 years. They know whether it's something they want to do. If not, it's going to fall through. 9 times out of 10, the first year business starts up, they're going to have a loss because they're buying all this equipment. They're buying just, if Johnny was in lawn care, he's went out and he's bought 2 or 3 lawnmowers. He might be in big lawn care. He might have had to buy a tractor. Well, IRS has certain rules, and they're actually tapering off on this some. But when you capitalize an asset, so Johnny bought a $10,000 lawnmower. I know, what's your name? I'm
Ricky.
picking on you.
It's okay.
Ricky, sorry. Ricky's gonna be Johnny for me today. Johnny went and bought a $10,000 lawnmower. I can't expense all of that. I can't put, there's nowhere on Schedule C that I can actually put that in as a true expense. But I can capitalize it. And when I capitalize it, usually we would split it, probably makers 5 years for depreciation. But IRS has some special guidelines, so he can actually deduct all of that $10,000 the very first year. He might not need it. If he doesn't need it, I really encourage my clients to split it up over the 5, to give him a little bit of a deduction each year for the next 5 years. IRS, however, has changed that rule for 2023. You can only deduct up to 80% of that $10,000 the very first year for 2023. They're tapering back off of that. So there's different options there, and that would actually come over as your depreciation. That actually is line 13 of your Schedule C. On the Schedule C, you've got your standard advertising. Another one, a lot that we see a lot of is, I got my personal truck. Can I write that off? Do you have a mileage log? No, but let me tell you, QuickBooks has a wonderful app now that keeps up with business mileage. And believe it or not, when you tell the clients that, some of them will listen to you and they'll actually try to use it. They have to have a mileage log. We try our best. A lot of them are going online with it now to split business and personal expenses. This is just a lot that you'll see. A lot of times, I'll be honest, I print this out and I give this to my client. And I'm like, these are the deductions that we can take. If you have something else, then of course there's other expenses. Write them down on your piece of paper and we'll go from there and see what we can do. A lot of them come up with, well, what about my cell phone? I'll be honest, we usually take a percentage of their cell phone. A lot of that is them trying to tell you how much of this, especially if they're doing this as a side job. 9 times out of 10, my clients come in the door and they're doing this as a side job. They still have W-2 income. So when they come in, oh, I use my cell phone 100% in my lawn care business. No, you don't. You got a W-2 over here. You kind of got to talk to them a little bit. Don't talk down to them. Just, you know, kind of just talk to them like we're going to talk every day. Well, Johnny, I know you don't use that cell phone 100% because you talk to your daughter every day. You know, you don't want to give the IRS any extra reason to come knocking on your door. As far as other expenses go, let's see, we talked about back to capitalization. A lot of stuff that we see on capitalization, I'm going to call depreciation. Kind of a general rule of thumb in our office, if it's something that they purchased that's over $2,500, we put on depreciation. It's going to be your big ticket items. It's going to be your loan cost. If somebody purchased a business and they had to take out a $100,000 loan, well, they got hit with $6,000 worth of loan fees on their mortgage when they bought the practice and had to have it financed. We capitalize those loan fees. They get a deduction for it every year. A lot of other stuff that we see on depreciation, I'm trying to think. Rental property is another thing. Do y'all know a lot about rental property? No. Rental property, I'm going to be honest, is another really great area. You've got clients that come in, they've got a second home. It's at the lake. But I rent it out to all my friends and family. Or they'll come in and I got a rental property that I want to add on to my tax return. But my daughter lives in it. Family lives in it. It's not a rental property. It's not a tax deduction. Your smart clients, I'll be honest, They know what to say when they come in the door. They know to tell you, I got rental property over here on Jackson Street, and I rent it out. Okay, do they pay you income? You know, got expenses for it? Well, they sometimes pay me in cash. They sometimes pay me on Venmo. Can they pay me on Venmo? Can they do Cash App? There's a lot of gray areas, y'all, and they know it. It's a lot of, you gotta figure out what the client's trying to tell you. And it goes back to the gut. And it goes back to, they've got to provide you the documentation. And you just kind of have to cipher through it. And if you know it's not supposed to be on there, don't put it on there. If they don't like it, that's okay. Because there's other, I hate to say it, there's other firms that they can go to. Or a lot of them, if they don't like what they tell you, they're gonna go do their own tax return. And guess what? They're gonna come back to you because they screwed it up. And then they got a lovely letter from IRS or Georgia. I'll tell you all about a couple audits we have going on in our office, and I kind of want to know a little bit about the IRS. Since COVID, it's become very, very hard to get in touch with IRS in Georgia. Thankfully, we have a tax practitioner's hotline that is wonderful. We don't have to wait on hold as much. We can get through. They are there to help you. Number one key is you got to have the client sign the power of attorney. But once you do that, we actually have software. If a client, Ricky comes in and signs the power of attorney with me, and she's like, Miss Jean, I don't know what I've done. You know, I've got a notice. They say I owe all this money for back taxes, but I filed all my returns and I've got all my documentation. I don't understand. We can fax the power of attorney in to IRS, and within 2 weeks, it will be uploaded in their system. We've got software, then we can actually log in, and I can see everything that was filed for her. I can see all her transcripts. I can see every tax return that she has filed, every balance that is due, all penalties, and I can see everything on her account that IRS has. So that is great. Georgia has a similar software. It's called Georgia Tax Center. That's actually where we also file our Georgia withholding, sales tax, our alcohol, tobacco license, 2290 license, just extra things like that. Georgia's got their website as well. Georgia has a separate power of attorney. At one time they would accept a federal power of attorney. I'm not sure if they still do, but Georgia's kind of got their own thing, and you can upload on their software. And the same thing, you can see tax returns, you can see what Georgia has. We've got, I don't know how news savvy y'all are, but the word on the street is IRS is hiring all these new auditors. Tons and tons of auditors that they're going to come in and start the auditing process. IRS has been giving away a lot of free money. IRS has been giving away PPP money. That's Paycheck Protection Plan money. Y'all heard about that? A couple of years ago, all businesses in town, a lot of schools, it was great. It was great. A lot of people got it. We helped a lot of people get a lot of money. It was forgiven. Our government's just giving away lots and lots of money. The next big thing is this earned. It's not earned. It's a payroll credit. My mind just drew a blank. It's for payroll taxes. And I'm gonna be honest, it's one that we've been on the fence about at our office, and the reason the name of it is not coming to me at the moment is because we are not filing it at our office. To meet certain requirements for that, they had to have a reduction in actual income of over 50%, and they had to have a copy of a state mandated shutdown order of like getting their supplies and that kind of thing. So right off the bat, we do a lot of our CPE credits online and everything. So we went to Tax Speakers where we get a lot of our stuff. There's a lot of different ones. But we went and learned a lot about this credit. I was like, no, too much. You have to amend payroll reports to get the credit. And I mean, it's a lot of work. I was like, we're just not going to do that. Government's still giving away a lot of extra free money, and they're hiring all these wonderful IRS auditors. Newbies, straight off the street. Gonna be like y'all. Newbies, straight off the street. Guess what? They want to come out and prove themselves. Don't know how this lady, and I'm not going to talk bad about her, because bless her heart, she is an IRS agent. She got her title for a reason. She actually works out of the Columbus office, and she's a newbie. And she ended up with one of my C corporations. And she is nitpicking every line. item on that return. Every line item on that return. My client that has the C corporation, he has rental property under his corporation. Didn't know we could do that. You can. You can do rental property under a corporation. But not all this documentation was in place. It's still personal name on documentation. There's a lot of different areas that the client, oh, yes, Miss Jeannie, this was 100% travel. She's not seeing it as 100% travel. She's seeing a lot of it as personal. This client also has huge retained earnings where he's had profits year after year after year after year, and his retained earnings account is just like out of control. She's wanting to hit us with back tax on accumulated retained earnings. And that's a chunk. He didn't really take dividends. There's a lot of different things, but I'm going to say she's new. She's very educated. She knows what she's doing, and she's out to prove a point. And I can't blame her. She's still in training. So the only thing I can do is justify for my client and go, okay, we will start taking the dividends of this amount. We will start, defense on his retained earnings is he wants to expand his business. He wants to do different things. He's got good sides, but it's definitely not going to end. It's not going to end in a mutual agreement. We will probably have to go to appeals for it. Appeals now is not in person. Appeals now is by paper or by phone call. And a lot of that is just because of COVID. And a lot of times, IRS, I hate to say it, you're on hold a lot because there's not enough of them. Their mail is so backlogged. They have so much going on and so much to do. It's kind of crazy trying to get a hold of them. Thankfully, we had the tax practitioners hotline like I was talking about. Georgia, they have an Albany office. People down there are wonderful. They want to work with you. They want to get accounts caught up. They want to get sales tax accounts caught up. On the Georgia side, we actually had a client receive a letter a couple of days ago, and Georgia just disallowed every deduction they had on their tax return. It didn't come from federal. And usually federal, if federal sees something and federal return is amended, now federal will notify Georgia, and Georgia will amend the tax return as well. But this was strictly on the Georgia side. They had $263,000 in gambling losses. They disallowed every bit of their deductions. They had over $400,000 worth of gambling winnings. So of course we took that $263,000. And they had itemized deductions. Georgia didn't like it. So what's Georgia doing? Georgia's saying, hey, I want every expense for every line item on your return that you took. This client has 3 Schedule C returns. This client has a farm, a Schedule F return. They want everything. So they're not always nice to deal with. They're not monsters. They are very nice. I'm gonna say this. You're gonna get somebody that's very nice and very helpful, that wants to help you with your client, that wants to get everything resolved. You might get somebody that doesn't know what they're doing. You might get somebody that just, the other day when we called about the client for Georgia, we got transferred to 3 different people. It was right at 4 o'clock, so then guess what? We got cut off. That's when you want to pull your hair out. You have to wait till the next day to call back because they close at 4. So I guess their switchboard closes at 4, and that's the reason the phone got cut off. We call back the next day, can't get through to anybody. We upload our response on GTC on the website, so hopefully we can get through to Georgia that way for our client. But back kind of to software, do you have any questions so far? Yes, I feel like I'm just rambling. Y'all talk to me.
When stuff like that happens and then there's certain deadlines that you keep getting cut off, what do you do? Because I know
Yes, it is very frustrating. And I'm going to be honest. I have a client now that we filed amended return for them back in 2019. And the reason we amended his return is because he filed his personal return, left his business off. We added the business, we filed an amended return. I have yet to get that amended return processed. We have sent in 2 fax copies of the amended return with letters. I have mailed 2 copies. The last letter we got is IRS telling me that we didn't work within the time frame. I have a copy from IRS. The way our software works is when we file a tax return, we get an approval, either approval or rejection, and it comes from IRS or Georgia. I've got approval from IRS of that amended return, so I know it hit their system back in 2021, and they're telling me they don't know what they've done with it. It can be very, very discouraging. That's usually when we hit a tax practitioner's hotline, and we ask not only to the person who answers the phone, which is there to help us, we ask for their supervisor. And we're just like, look, we're getting nowhere with this. That case for Georgia, we uploaded it online. We'll follow up, and I'll be honest, for Georgia, I'm thankful we have our local Albany office because they help us out tremendously. But that client for Georgia, I mean, it's gonna be over, they use QuickBooks, we printed their QuickBooks, and it's over 500, 600 pages just in income and expenses. And if they have to go back there and find invoices and stuff like that, it's just, the clients get discouraged quick because they're like, well, what if we just take it all off? They want to pay $23,000. You want to pay $23,000 for that? We need to come up with some expenses. But now the bulk of theirs was the gambling losses. Okay, well, we can justify that real quick, like we have documentation for that. The only thing I can tell you is to have patience. When it comes to IRS, when it comes to Georgia, even when it comes to some of your clients, you've got to have, you've got to have the patience. I've got some clients, I've been ready to file their tax return for 2 months. I need one piece of information from them. And I'll call them, I'll send them an email, I'll send them a text, hey, don't forget, this is all I need, I want you off my desk. They're not in a hurry. You know, I'm like, you're sitting on a refund. You've got so many clients that they have a refund coming. They still want that extension. They still don't want to file till September or October. Why? You know, I'd like to have that $1,000, $2,000. For some people, have kids, it might be $4,000 or $5,000. I'd love to have that money in my bank account. We do electronically file all of our returns. Usually they get their refunds between 2 to 3 weeks when we electronically file. We do not advance money ahead of time. Legally, I cannot do that for any tax preparer. So when you come into our office, we can have your refund direct deposited into your own bank account. We cannot take our fee from that. It is illegal for me to take my fee out of your refund. So we cannot do that. We're pretty honest with a lot of our clients and everything here in Sumter County. We're going to trust Miss Ricky if she comes in and she says, Miss Jenny, I just don't have it to, you know, give you your fee for processing my tax return. Can I pay you when I get my refund? Absolutely. If you don't, I'll send you a reminder bill in the mail. You know, I got your name and address and I can track you down, you know. So we try to have respect for our clients, and we do. And it's, you have those that come in and they want to sit down and talk. Let me tell you, my Susie Q is just got all the curls in the world, and they're going to sit down and they're going to tell you about their family. They're going to tell you about their business because they want to. They're excited to. You got some that come in and they're just all business from the get-go. They're just there, do their tax return, and out the door they go. I've got, I'm going to call her my little old lady because that's what she is. She's won my heart over. She came to me about 6 years ago, and she was divorced. She was probably in her 60s, but she had met her new man, and they go all to these bluegrass concerts. And this lady comes in and she tells me stories every year, and I hadn't seen her. This was 2 years ago. I hadn't seen her yet, so got her an extension. Still hadn't seen her yet, and all of a sudden, out of the blue, I get an email, and it's from her niece, and she said, you know, Miss blah, blah, blah is actually down in Leesburg at the nursing home. It's like, oh, you know, I hated to hear it and everything. She's doing good. She's doing rehab and everything. So I was like, well, and she's like, I don't live there. She has no other family. I was like, okay. I said, I'll go to Albany quite often. I'll stop in and see her. So I stopped in and saw her, got her tax information while I was there, come back to the office, do her tax return. I go back down to Albany, take her tax return. So we do go above and beyond. You're going to find that I tell my girls, I preach to them about this probably once a week. We have office meetings in our office, and I've pretty much kind of, I'm going to say I want to say I have high expectations. I want you to be treated with the utmost respect and customer service out of the moon, like Chick-fil-A. I mean, you know, I'm just going, my girls know it's you know, yes ma'am, no ma'am on the telephone, they identify themselves on the telephone. I want you to feel comfortable when you come into my firm. I want you to feel like you're not just a person. You're not just a number. You have a client number in my firm, but you're not just a client number to us. And it's a small town. Everybody's gonna know somebody, you know, that kind of thing, but confidentiality agreement, everybody that walks in my door to work for me, for full-time, part-time, whatever, sign confidentiality agreement, and I stand by it. We don't discuss. Ricky might come in and she might have a W-2 that has, you know, she makes $300,000 a year. I print up her tax return. Wishful thinking about it. We're gonna get you there. Ricky's, you know, I processed her tax return. Kind of our cycle is I would sit down, meet with Ricky, I processed her tax return. We'd sign everything, get everything handled, I'd print her return. I've got another lady in our office that would actually go down and check the totals that I entered off of her W-2 or anything that had federal and state withholding, just as a second pair of eyes to make sure we've got numbers entered in correctly. And what's your name?
Michael.
Michael, okay. Just say Michael was assembling tax returns in my office, and he noticed I entered in an extra zero and gave her a whole lot of extra money over here. So Michael's gonna come back and say, hey, this number's wrong, okay? We'll fix it and everything, but that's Michael's job. But then I hear Michael, what's your name?
Steven.
I hear Michael over here telling Steven, hey, did y'all see him? Oh, no. You're gonna get read up. We don't talk about that in our office. Anything that's said in my office between me and Ricky as confidentiality is confidentiality in my office. I will not go talk to the boys about it. I will not go talk to my boss about it. Mr. Strickland and I do not discuss client information unless we have to. Or I have a question, Mr. Charles, I don't know what to do with this on Ricky's return, and I'm trying to get her the best outcome I can. Kind of like a colleague to colleague kind of thing, or partner to partner kind of thing. We're by the book, you know, and I want it to be that way. I don't want to know your information is being talked about, even in my office. I might think it, Steven might think it, Michael, no. I switched to Michael Steven. The boys might think it, oh, wow, she makes a lot of money. That's great, y'all can think it all you want to, it just better not come out of your mouth. So, you know, that's just kind of, I'm just trying to be real with y'all and tell y'all real world. You know, you don't, you're going to see a lot in this field. You're going to see a lot. You're going to see, as they get older, you're going to see how much retirement they have. You're going to see how many kids they got. You might see how many kids they got that you didn't know that they had, that the baby daddy belonged to somebody else over here, and you're like, whoa, didn't know that one. You might see their business and be like, wow, I did not know they were making that kind of money. You know, you might see that grandma and grandpa over here are funding their 529 plan for their grandchildren, and that's a Georgia state deduction. You might see that they're giving to Georgia Heart and Georgia Gold, and that's going to South Center, that's going out here to Sumter Regional, or I say Sumter Regional, to Phoebe Sumter, and those are Georgia deductions. And you're going, wow, I didn't know they kind of had that kind of money. Or you might be sitting back going, wow, they owe a lot of taxes. How are they going to pay that? They do. Oh, wow. You know, where'd that money come from? You're going to see a lot of financial information. And to a lot of people, that's their heart, that's their goal. They've worked their life off to get where they are. And it's a lot of personal information. It's kind of like when you go to the doctor. Sometimes you don't want them to know all of that. And you don't, you know, you might not want to sign that HIPAA form and say your husband over here can see your medical records because something might be going on. That's kind of just how an accounting firm is. It is a lot of personal information. So I stress confidentiality big time in our firm. We have monthly meetings during tax season. I'll kind of wrap up and kind of tell y'all a little bit about our software and that kind of thing. We normally try to have those meetings just to kind of see how the week's going, kind of what all we have going on, what business clients we have in-house that we can go ahead and start working on. We use, I hate to say it, we use about 5 different softwares. Trying to get down to 2 or 3. We've got one software that the actual company name mingles in. There's 3 different tax programs through the same company. So we have our tax program, we have, I'm going to call it our depreciation, our fixed assets, which is everything we capitalize, and then we have our billing program. And our firm bills by the time we charge that client. Ricky comes in, and it takes me an hour to do her tax return. then I'm gonna bill by an hour taken to do her tax return. If she brings me in a whole box of receipts and everything that I have to go through, and it took me we're gonna bill by the time that we actually spend on it. So my girls, and they hate me for it, and I'm not a big fan of this, I'm gonna say it. We keep up with the daily timesheet, and we put in the client that we work on, everything we do, from sales tax to payroll to data entry to everything, and then once a month when we do billing, it shows me everything that they did for that client for the whole month, and then that's how we bill our clients. Those three programs linked together. So if we change Ricky's address over here, it's gonna flow through over here to the other program and everything's gonna update. QuickBooks, y'all familiar with QuickBooks? Yes, no, kind of, sorta? All right, on y'all's own, y'all need to go to QuickBooks Online. There is probably, it's not a bad thing just to learn. Anyway, just in general. They have all kinds of accounts and student accounts and stuff like that that y'all can set up on there. And it's great. They've got a desktop version, they've got an online version. A lot of our clients are using it. We're trying to push them to the online version. And when they do that and they set us as an accountant, it's great because they can have it pulled up at their home and call me with a question, and I can pull it up at the office and I can say, oh no, that's not what we need to do. Or you need to put this here. So it's a lot of interface. QuickBooks is great. They keep upping their prices. That's the only thing I don't like about it. But QuickBooks is good. We use another accounting, our in-house accounting software is called Dillner's, or Full Contact Accounting. There's really nothing special to it. It's where we do a lot of our financials. It's kind of cut and dry. I'm trying to think of what else we use. That's the bulk of them. We have, also with our tax program, we have a program called File Cabinet. And it's literally like an electronic file cabinet. So Ricky has a drawer in there and it shows her client number in a drawer. It has every return we've prepared for her. It has all her tax documentation. When she brings in her tax documentation to us, we scan it all in, so we keep a copy of it, and it's stored there in her electronic file cabinet. We haven't gone paperless yet. I'm scared to go that route yet. So she still has a file that's in the main file room, but we're trying to get that way. We're slowly getting there. And so we've got a lot of kind of different softwares and stuff, but a lot of them link. The computer does a lot for you, but you've got to still know the basics. IRS changes every year. Every year I have to have my 24 hours of CPE. I learn all the new stuff. I went to Savannah for a Georgia class for 2 days this past year and learned a lot about a flow through. There's a lot of wonderful opportunities out there. Just don't sell yourself short. Whether it's the manufacturing, whether it's a local firm, whether it's Georgia, whether it's IRS. I've got a friend that works for the IRS. She absolutely loves it. I can't down talk them all the time. She loves it. She actually worked for Georgia Department of Revenue before she went to IRS. You know, there's a lot of great opportunities out there. Whether it's locally Americas or whether, you know, y'all branch out and do it somewhere else. So, y'all have any other questions?
I did, about
Yes.
How is it that if I'm buying the same as somebody else that they get more money back than I do? What are different tax preparers are doing to have them get that? It's even like 5,000 more, and you're just like, how did that happen?
A lot, I'm gonna just be honest with you.
Okay.
A lot of times if they've done that, they have either included an extra kid
Okay.
that did not necessarily belong to them,
Okay.
or a lot of times we see some change like in education credits.
Okay.
So, and a lot of people don't understand, the child tax credit cuts off when you're 17. Don't ask me why, it's something the IRS has always done, I don't agree with it. But when your kid turns 17, you drop from getting $2,000 for them down to $500. That's a $1,500 difference.
Even with people who don't even have kids, they're getting
Yeah.
back even more than I do, and I'm just like, what are they doing?
A lot of them, they know that middle ground
Okay.
of where their income needs to be,
Okay.
and they're getting earned income credit.
Okay.
So if their income is in a certain amount,
Gotcha.
they're probably getting earned income credit, plus they've got income coming out of their W-2,
Okay.
it's making their income lower. So they're,
Wow. Okay.
I'm gonna say they're playing the system, they're not necessarily playing the system.
Right.
They just might have low income, and that just might be all that they earn, and it's not necessarily
But
that
their
they
in-
know what they're doing.
But what if their income is
You know?
higher than mine? That's where I'm at. I mean, these are people who they make some good money, and they're getting back even more than I do.
Then they possibly have a Schedule C business on there, showing a humongous loss. to bring
Okay.
their income down.
Okay.
Education credit possibly, but education credit's even limited to 15,000, so I wouldn't,
Neither
and
one.
if they don't have kids, then they're not gonna be able to file education credit unless
Okay.
it's, now, some of them will file education credit as an adult, because you can get a lifetime opportunity education credit.
Okay.
So education credit's not just limited to, I'm gonna say younger students,
Right.
adults that go back to school can
Right.
still get these credits.
It's very
That's,
interesting.
that's gonna be a tough one.
Okay.
you just-
You just have to look at
You
it.
would just have to look at it.
Okay.
But just sticking out, I'm gonna say either a business that has a loss that brings their income down,
Okay.
or possibly something to do with education credit. There's not a whole lot that you can.
That's what I thought.
That's the
what I
thing,
thought.
there's not a whole lot that you can finagle on there. And I'll be honest, and our software, one of the rules for Schedule C is you have to show a profit. You can show a loss for 2 years, by that third year, you've got to show a profit. You've got to show a profit for 7 years out of 5. And our software tells us that. Our software, I'm gonna be honest, if I had to go back and manually do a tax return, yeah, I could do it, but I'd probably have to break out my old accounting book just to make sure that I'm putting stuff where it needs to go. Because software does fool you, I'm not gonna lie. And y'all are gonna get out there and you're gonna see it. Do y'all offer a computerized tax accounting class?
We don't do.
Okay.
No.
Anything on that side? Learning the software does a lot, but you've got to know on the software what to do. And they usually tell us as tax practitioners to do your own personal return first and try out the software. I'll be honest, I just filed my business return for my husband on the deadline, like Friday, it was due September 15th, I filed it at 2 o'clock. Okay, so we don't always do that. But you've got to know in the software, yes, it's calculating this correctly. But our software will give you diagnostics. A lot of the softwares will give you a diagnostics. And it's a great tool because it's helpful. If you didn't mark a certain box, it's gonna let you know, but you've also got to know what they're eligible to deduct. And that's where it all falls back on us. Y'all need, you've got to know, can they really truly deduct these expenses? Because if they are audited, they're gonna come running to you. And IRS, the first thing they ask for is bank statements. Sometimes they do a full return audit. Sometimes they might say, I just want 2 or 3 items out of repairs and maintenance. Or I want 2 or 3 items out of this. So sometimes it's not a full-fledged line-by-line item, and it's just a couple of things. But really with the forms, that's a good question, because there's not a whole lot. If kids are not involved, that's where, there's not a whole lot that you can finagle on there. There's really not.
And they're getting like 8,000 back. I know.
That'd be interesting.
Me too.
That would-
There's 2 people I want, now that I'm taking this class, I want to actually look at both of them. And-
If you have an opportunity to,
Okay.
if it's somebody you know well enough to be like, hey,
No, it is.
I'll tell you this, you can cut the names and everything off the top of it.
Okay.
I can leave some business cards.
Please do.
I'd love just to look at it.
Me too. That's why I asked you.
You can-
That's why I asked you.
You can email it to me, you can come by my office. I don't care about names, I just want to see numbers.
I want to see it as well.
And we could,
Okay.
if you get your hands on it and it doesn't make sense to
Can
you, I'm
please
sure you can talk to
leave
Ms.
me your
Carol
card.
as
No,
well.
please leave me your card.
And, I'm not gonna say there's not crooks out there.
There's plenty of them.
There's crooks no matter what business you work in, y'all. That's the thing. And I'm gonna be honest, you see it more and more. I'm filing a tax return, there's 4 kids on there. My tax return's rejected because somebody else has already claimed one of the kids. It's happening more in college kids. I had 4 in the past 2 years, and they all came from Sly County. Not good Sly County. They had a data breach. Social Security numbers were leaked. You talking about some irate parents? Because it was like, okay, well, we can take your kid off and file your return, or we got a paper file, because your return was rejected. And you gotta show proof of how you can claim that kid. You gotta send a birth certificate, you gotta send a social security card, you gotta send a medical record, you gotta show proof that that kid belongs to you, so you can claim it on your tax return. So there's a lot of different things that go on. It's fun. I'm not gonna lie. I know it's not probably very often that some people can say they love their job. I love my I love the work that I do. I love the clients that I work with. Some days I love the staff that I have. No, I'm just kidding. For the most part, I love the staff that I have. I've got one girl that's been working with me. It's her third year with me. My receptionist is new. She's been with me about 3 months, and it's slow for us because she's like, Strickland Accounting, and she hasn't been working very long, so I'm like pepping her up like, Strickland Accounting, this is Caitlin, how may I help you? But it's interesting. It's, well, like I said, whether you go to a firm, whether you go to manufacturing, y'all find your niche. You've made it this far in accounting, you're in tax. This is probably the meat of it. And it's gonna have its challenges. What you learn here in this semester might change next month with IRS. It might change 2 years down the road with IRS, but that's the whole point in the CPE and staying up to date and learn as much as you can. Check out QuickBooks. QuickBooks is going full blown. QuickBooks even has a tax software program. We haven't ever used it. I think it's called Tax Pro. But a lot of people use QuickBooks Online just because it's easy. And it's an app they can put on their phone. And Johnny's out cutting his grass, and he's going to send his client an invoice from his phone because it's easy. It's what we do nowadays. Y'all got any other questions? Did I answer your question good enough? I know I probably didn't. We help them the best we can. And I'm going to be honest, if I don't get the right answer from IRS the first time I call, I'm going to call again. I got a power of attorney on file. I can call the IRS and harass them as much as I want to. It's going to be, now I'm going to be honest, when I call the IRS, I usually have 2 or 3 clients I have to call about, and I dial the number, and I'm going to sit on hold myself. And then they're going to come on the phone, and you're going to give them the social security number, what you're calling about. They have to verify my CAF number, all this other stuff. Let me put you on a 7 to 10 minute brief hold while I pull up their account. Okay. Then they're going to come back online. Now, what did we need to talk about? And I tell them everything we need to talk about. Let me put you on another brief 7 minute hold while I pull up that information. So it's not an easy yes or no, and we might not like the answer, but I'm a go-getter. I jump in with 2 feet. I don't, I'm at bat for my client. Even though I don't like this IRS auditor yet on my C Corp, she's a newbie. She's probably going to take them to the cleaners, I'm going to be honest. But I'm going to fight tooth and nail for them too. That's my job. So it's a good challenge for me because it's actually my first C Corp audit. So I'm kind of excited too. So I'm doing my homework just as much as she's doing hers. So, anything else?
Thank you.
Thank you.
Is that good? Okay.
Thank you.